Welcome to The Explainer. Look, anyone can read the headlines about Apple's latest earnings, but today we're doing something different. We're going to dive deep into their official 10Q filing, that's the legal document, to find out what Apple is really telling investors. We're talking performance, cash, and the big risks they see coming.
So, here's the game plan. First up, we'll tackle those monster, record-breaking numbers. Then, we'll follow the money trail. See how much actual cash this machine is spitting out. After that, we're getting into the juicy stuff, the risks Apple has to tell you about by law. And finally, we'll pull it all together so you can see the big picture.
All right, let's kick things off with the main event. This was an absolutely blockbuster quarter for Apple. I mean, wow. But the real question is, what's driving this? Where did all this success come from?
Okay, get ready for this. The top-line number is just staggering. In one quarter, just the first quarter of their fiscal year, Apple raked in a record-shattering $143.7 billion in sales.
But here's what really makes you sit up and take notice. It's not just a big number. That's a 16% jump from the same time last year. Now, you have to understand, for a company the size of Apple, getting double-digit growth like that, it's just phenomenal. It's not supposed to happen.
And you know what? That strength goes straight to the bottom line. We're talking pure profit, net income, up almost 16% to over $42 billion. And for you investors, the earnings per share, or EPS, shot up by a whopping 18%. I mean, this is a company that's firing on all cylinders.
So, what was the magic ingredient here? Well, no surprise, the iPhone was the main engine. Sales absolutely surged, up 23%. And that was backed up by their super profitable services division. The App Store, Apple Music, all that stuff. That grew a very, very healthy 14%.
But, and this is a big but, you've got to look at the whole picture. It wasn't all sunshine and rainbows. Mac sales actually dropped by 7%. And even the wearables category, watches, accessories, it dipped a little bit, down 2%.
Okay, now let's talk about where this money is coming from. Geographically, I mean. And wow, the story is China. Sales in Greater China absolutely exploded, up an incredible 38% year over year. Think about that. In a market where they have such intense local competition, pulling off that kind of growth, that's a huge win for them.
All right, so the sales numbers are amazing. But what about the cash? Let's switch gears and look at the financial bedrock of the company. We're talking about the raw cash that fuels this entire empire.
Now, before I show you the number, let's just be clear on what we're looking at. We're talking about operating cash flow. And all that means is the actual hard cash that comes in from their day-to-day business. It's not some accounting trick, it's real money in the bank. It's probably the best way to see how healthy a company really is.
So when you look at their official cash flow statement, there's one number that just jumps right out at you. From their core operations, Apple generated almost $54 billion in cash.
Let me say that again because it's kind of hard to wrap your head around. That's not for a year. That's for one quarter, just 3 months. It's an almost unbelievable amount of cash.
So what do they do with all that cash? Well, a lot of it comes right back to the shareholders. This quarter alone, they used it to fund a $25 billion stock buyback and paid out almost $4 billion in dividends. That's what a cash machine does.
Okay, so far, it's been an amazing story. But we have to look at the other side of the coin now. Because in their own legal filings, Apple is very, very clear about some big risks on the horizon that every investor needs to be aware of.
Risk number 1, the global regulatory battles. This is a big one. Over in the EU, they're fighting a €500 million fine, and they're facing another investigation where the penalty could be up to 10% of their total global revenue. That's huge. Meanwhile, back in the US, the Department of Justice has hit them with a massive antitrust lawsuit. And that whole legal fight with Epic Games over the App Store? Still going.
Okay, risk number 2 is all about tariffs and trade disputes. And this isn't some what-if scenario. In the 10Q, Apple says flat out that new tariffs are already eating into their profit margins. So the damage is already happening. It's a real and present danger to their bottom line.
And risk number 3, this is one you have to dig for in the financial notes, but it's crucial. Take a look at this. It's their supply chain. A whopping 73% of their manufacturing is tied up with just 2 partners. 2. Now think about the risk there. If anything goes wrong with either one of those partners, whether it's a factory issue or a political problem, it could create a massive headache for Apple.
And listen to this. This isn't me saying it. This is a direct quote from Apple's own management, right there in the 10Q. They're telling investors to expect volatility and downward pressure on their profit margins. I mean, when a company tells you that directly after such a great quarter, you really have to listen.
So, okay, we've peeled back the layers of this 10Q. We've seen the good and we've seen the bad. What's the bottom line here? What should you, as an investor, be thinking right now?
You know, it really boils down to a classic story for investors. The bull case versus the bear case. The bull case, it's simple. You've got a company that's breaking records, making insane profits, and printing cash like nobody else. The bear case, though, it's just as strong. You've got these huge regulatory storm clouds gathering, tariffs eating away at profits, and this really concentrated supply chain risk.
And that's the real tension here, isn't it? For anyone looking at Apple right now, on one hand, you have this perfectly tuned machine that's executing flawlessly and generating an unbelievable amount of cash. But on the other hand, you have these massive external threats that are completely out of their control. So the big question is, which one wins out? Can their incredible performance keep overpowering these growing global risks? That is the billion-dollar question everyone's trying to answer.